Harmony Gold reported a dramatic turnaround in first quarter earnings as it cashed in on rand gold prices hovering at quarterly highs. Headline earnings per share have come in at 123 cents, up from a loss of 15 cents per share in the previous quarter. Production rose 8%, but output is likely to fall in the December quarter after it lost about 25,000 ounces of production due to an illegal strike. Earlier, we spoke to the company CEO, Graham Briggs, and asked him how the group dealt with the strikes that have been hurting the industry.
I guess what it comes down to is really talking to people, engaging with them, collapsing the hierarchy, really getting into dealing with the issues on the ground. I guess, our guys have done a lot of hard work. The general managers, HR managers have really come to the fore in this time. One of the big issues out there is that, all the old rules and the rule book doesn't necessarily apply. That recipe that we've been using for the last 30 years in South Africa, there's some new rules, and of course we're busy rewriting them. So it's engaging with basically everybody and anybody who wants to be heard, and using a lot more facts. Don't use one blog as a fact. Get some facts behind the issues.
Harmony ended the day more than 6% higher at 72.21 rand. For more, we joined by Peter Major, mining analyst at KD's Corporate Solutions. Did I catch you saying it should be 100 Rand, Peter?
Yeah, I think it should, Bronwyn.
How are we going to get there? What's the value unlock here?
Look, first of all, this thing's trading at the worst rating in 20 years. I think he's trading on almost a 10% earnings yield, and that's the lowest he's been on in 20 years. And gold shares, we know for decades, traded at 2 and 3 times the PE that the normal market did. So here you got a market on close to a 14, 15 PE, and Harmony's on, what, close to a 10? So I don't know why it was sold down so far. It had a wonderful quarter. Graham's been doing everything right now for a couple of years. I'm a little concerned what he's going to do with Papua New Guinea. I think it's a fantastic project, but he's had it many years now, and he acts like...
But he's also used it to talk up his position in the market. Papua New Guinea has been in every statement that they've come forward with. So the market is expecting great things from Papua New Guinea.
Yeah, and it's not giving it to him. It's not helping his rating. His rating is reflecting a South African company only. And he's done a very good job running these assets here. The grade's increasing. Costs are coming down a bit, and I think the grade's going to keep on increasing because he's getting rid of old production and bringing in newer production. But Papua New Guinea, that's the key. How does he unlock that value? That's what's going to make this share go over 100. And I think he has to sell it or sell a big chunk of it.
And Peter, the interesting thing here is that, like you say, is his rating's really reflecting a South African-only company. Right. When you look at the production, it's pretty much a South African-only company, yeah, with the prospect of a Papua New Guinea operation. When you compare that to someone like a Gold Fields, for example, that's slightly more, well, I guess slightly more diversified, Anglo Gold as well, the ratings are all reflecting a pretty depressed outlook on the South African industry locally. Now, the important thing for me looking at that Papua New Guinea project is when you look at the cash costs of a project there versus the cash costs of a project here, they look very different. And so the prospects potentially look a lot more rosy there in terms of potentially producing that. The market's not reflecting that prospect right now. He's been punished.
Look, this market has become very short term, and I kind of agree with the market. We've seen long term cost you money, cost you performance. This is a long term project. This makes Minas Rio look easy, I think.
And I think we have to say, trading in gold stocks in South Africa is for trading, not necessarily for investing. As you just said, taking a view of most investors, it is relatively short term. And I don't think it's really quite fair to compare the ratings or the multiples on a South African gold stock with those of the international gold stocks. And if one does that, that's not comparing apples with apples. Therefore, maybe it may struggle a bit to get to your target level.
Well, it might, but gee, at this level, I bought some a month and a half ago when it was 70 bucks. Now it's finally 71, 72. And yet the gold price has gone up, the rand has gone weaker. These are magnificent results. Papua New Guinea's there, but it's $4.5 billion capex. It's 7, 8 years. Now, I don't want to wait around for that. The investors aren't going to wait around for it. I think Graham has to do something in a lot shorter time period.
Would you say that management has made an error in talking up that asset before it can deliver?
No, not at all. But
well, marry the two. Where are the results if you're going to talk up an asset? Surely you've got to execute.
No, he is executing. But this thing is so big, Bronwyn. he doesn't even have a completed bankable feasibility because it keeps expanding the parameters. It's just so huge. But he's tried talking it up. He's informed us everything about that project, and he's not getting any rating for it. So he's now going to have to take some action to get rating. Talk is no longer going to, hasn't worked. It's not going to work. And the action is going to be, are you going to sell some of this, Graham? Because $4.5 billion capex, even if your share at 50%, that's 2.25. And it's the time. You know, 6 years, $2.5 billion. I think he can do things. Look at Friedland, look at Rob Still. They know how to realize value, and assets that aren't half as good as this.
I mean, something that's always a question in my mind is when you look at gold. I like gold, but looking at the physical underlying commodity versus the miner. I mean, naturally, on a day like this, you get the geared impact and you get nice big moves buying the underlying stock. My preference has always been for the physical gold underlying, and in this particular instance, I mean, gold's had a decent run, specifically in rand terms. When you look at this stock, I think over the year to date, in fact, over 12 months, it's down 35%. And that disconnect's too stark to ignore. Your preference, would that be to go for the gold stocks rather than the gold?
In this case, without a doubt, I'd be buying the stock. If you go back 10 years and you bought the gold ETF and you bought Harmony, the gold ETF has done 10 times what Harmony has. It's way, way overdone. So without a doubt, I'd be buying Harmony. Even if the gold price comes down, I'd be buying Harmony now.
Because you hope it's going to fulfill promise, but it hasn't over this period. And doesn't that say that the investment community are saying gold mining in South Africa, it's a sunset industry. The best is past, long past. You may look for short-term trading opportunities.
I see this is going to get heated. I love this. Keep going, gentlemen. Right, Peter, your best shot.
Hear me.
How can Indonesia be passed? He's just starting on it.
But it's 6 years, 7 years ago. Wow, that's a lifetime in the mining sector.
Well, I don't think Graham's going to really try and build this on his own. It takes 6 to 7 years. Okay.
All right, I'm going to take it to the gold price, $1,713 an ounce. We've got sure quantitative easing that's going to continue out of the US.
Yep.
That is going to push this gold price higher and higher. Are we going to see that trajectory through $2,000 an ounce before year end?
No, we're definitely not going to see it. But I am less of a bear. You know, I thought we were going to see about 1,200, maybe 1,300 at the end of this year. So I'm changing from a real bear to a very weak bear. I don't think gold's going to 2,000, but gee, if it just stays at 1,600 to 1,700, that's great news for Harmony, and it'll help all our
Have you now changed your view? You're still not calling for 1,200?
No, I have changed my view, Brian.
Have you?
Yeah.
All right, let's get your thoughts quickly on platinum and where we're going on this one.
Yeah, I'm much more worried on platinum because they've got a higher cost base, and all these labor issues have really hurt them. There's a lot of rationalization. There seems to be an overabundance of platinum in the world. There's not an overabundance of gold. They're pretty oversold, but they need a lot of work to justify them coming up. And none of our platinum mines have an Indonesian Wapi Golpu like Harmony does.
He just loves that Papua New Guinea story.
Yeah, sure.
I think they should hire you as investor relations at Harmony. You can unlock the value for Papua New Guinea.
Look, somebody's got to, yeah.
I mean, one last thing. If you're looking as an investor and you've got options, you've got South African gold mining stocks and you've got global gold mining stocks.
Yep.
The headwinds we're facing locally from a cost pressure perspective, we're talking energy, we're talking labor, which is the big elephant in the room, really providing significant headwinds to the local industry. For an investor that has that option, would your preference be still for South African gold stocks, or would you go for something like a Barrick or Newmont?
No, because these South African gold stocks have been drilled down so hard because of all the difficulties you've mentioned this year, I would definitely go for it. And look, Anglo Gold, 50% of their production's out of the country. Gold Fields, maybe 25, 30. Harmony, you're right. All their earnings and real gold production are still here. So they've got the most gearing. They're the most oversold. Look, John Bickard, Alan Gray, can we all be wrong? We can be.
In terms of the cyclicality of the platinum industry, you say you're concerned over the platinum story, but you've got the undeniable facts that 80% of the world's platinum comes from South Africa. Supply side constraints, as we've seen, are ultimately going to lead to increased demand. It's simple economics.
They are, and I think it'll be sooner rather than later, Broman. I think you're spot on. Yeah, I think it might only be 6 months before those factors come in, because this 2-3 months took a lot of that excess platinum on the market. And you can bet they're all going to be looking to rationalize production, not expand production.
Quick one on the diversifieds, Anglo versus BHP. Where do you stand?
Man, if you look at BHP, almost no debt, fat margins. Yeah, but Anglo Gold also, it's oversold. I can't believe Anglo Gold can get worse. I can't believe it. Amplats, it doesn't have to do too much right, and Amplats is what's going to really drive Anglos. I'd split my investment 50-50 now. I don't have the guts to take it all out of Billiton and put in Anglos, but yeah, I'd go 50-50.
That's an economist's score.
Okay.
Hedging all bets.
Yeah, it is hedging.
Isn't Anglo getting close to being in play now? You know, that, and especially with the Xstrata Glencore deal, very likely going to be sewn up. Just think of them all getting together. Yes, there are lots of egos there that will be difficult to satisfy.
No, I think that's a pipe dream.
Yeah, who knows?
I think we're going to have to get you to jump in between. I should have seated you in the middle, and had Ian and Peter on either side. A quick comment from you, Mohammed, before we close.
Yeah, I think if you look at that spread between Billiton's and Anglos, you know, the trend's still very much favouring Billiton's over the longer term. There's slight timing differences, so you're pulling back to the trend line, favouring Anglos over the very shorter term. But I think Billiton's a quality asset. My preference has always really been for Billiton's over Anglos, and I'd probably stick with that for the foreseeable future.